Hey, what's up guys, how you doing? It's Simz BWS back again with another video. So today this is the second segment of how I trade. So this is the second part of that segment that I dropped, of the last video that I dropped on how I trade when we was looking at the Euro card trade. So today we're going to be looking at the Deriv Indices pairs and the other index pairs. Okay, so if you don't have a Deriv account, go and sign up on the Deriv account on the link on my description below. Okay, so today I'm going to be looking at the Volatility 75-1/8, and I'm going to be breaking down this trade or how I trade this pair. Okay, so like I'm going to show you something nice on what I do on my screen when I go to tradingviewbinary.com. Okay, so it's the tradingview.binary.com. so if you go to this website, you're going to find this chart. Okay, so I like my candles to look gray and the bodies to look black. So you can customize your candles to anything that you want. So this is for amateur traders. If you already know about this, you can just ignore it because it just logged on this website right now. So I'm just trying to make my charts look clean. Okay, I don't like to see this, so I'm going to put it on transparent. Okay, so now that my chart looks clean, I'm going to show you like back testing, looking back at the chart. So on these markets, like how these volatility indexes move, I don't like to go higher. I usually go higher when I'm looking for buys, but now as I know that this market is already bearish, okay, let me just clear everything so that we back test together and see how this market moves. So we can look on the daily time frame, but I don't like to look on the daily time frame, so let me just go to a 4-hour. Yeah, this binary trading view can be slow sometimes. Okay, so let me clear everything on the chart. Where is my chart? Okay, so it's clean. We don't have to look past behind it. We just have to look at the recent market structure starting from this point. I'm just going to mark it out with the vertical. So we're going to start on this point. Okay, so what do we see here? We see a clean bearish market structure. This is a clean bearish market structure. We see that the market made the high and then made a low. It failed to break the high. It came to take out this low. So what are we seeing here? We're seeing that the market has made a high low, high low, and another high, like coming down, breaking structure. So now as we are looking at this market on this current market structure, we see that we are still bearish in the market as we just took out this low and we just continued trading lower. Okay, so I'm going to show you starting from here on how like I would be approaching these charts. Okay, so if say probably this market was, I would be looking at it on a lower time frame, let's say a 1 hour. I'll be looking at it on a 1 hour time frame. So what do I see? As this market started pushing bearish, I saw that the market started making this movement like a distribution structure. So I saw that it left some imbalance here that needs to be filled. So now I'm trying to look at this. Unfortunately, price didn't reach that structure, but actually the price filled this imbalance. So as I saw that price filled imbalance, as we are looking at this market now, so this has already happened. We're just looking at the price coming to tap into this zone. Okay, we wanted to see price coming to tap into this zone. So as market was distributing bullish market structure, there weren't any lows that were broken until the market made this high, and then this low was taken out. Let me mark it out. So as this low was taken out, what do you expect? We are expecting that the market is going to be giving us bearish prices, and the market actually gave us bearish prices. So I was actually looking for market to break this low so that I confirm that we are bearish on this market. So as the market took out this low, I marked out this. You can mark this out as your supply zone. Okay, so there is no reason for price to come back top here. Of course, it's possible for price to come and mitigate here, but there's no reason for the composite man to push price above here, because it is going to be negative on his other positions. Okay, so if you trade smart money trading, you understand what I'm saying when I'm talking about this. Okay, so as price pushed down, so this would have been your entry. So as price moves the bearish momentum, the structure was broken. Okay, so we can go to a 50-minute time frame where you will be actually looking at these moves. Okay, so we need to put the chute back, push it back. All right. So as price broke the structure, what are you looking at? You are looking for price to give you price action that it needs to come and mitigate some of it. Can mitigate anywhere in these zones where the composite was involved. So it will be hard for you, like if you're trying to go, if you're trying to catch the move on every supply. You understand what I'm saying? Like trying to catch this move on the supply. Can you imagine if you try to catch this move on the supply, like trading, dumb money trading? The market would have mitigated. Look, mitigated, invalidates the supply, and then you wanted to trade this supply again or the supply again. So this was the supply that got mitigated. Okay, so here you would have been out on this trade. I don't know, this pair doesn't move a lot, so you would have risked less. But what if this supply didn't hold? What if this supply here didn't hold? What if the supply here didn't hold? What if the supply didn't hold? So you would have been losing trades again and again, trying to catch a falling knife. Okay, so what I usually do is I want to watch price as it starts to move. Okay, I like to watch price as it starts to move. So I would be expecting price to come and mitigate this area. So if the price didn't come and mitigate this area, which means I wouldn't have been involved on this trade, because this is the supply zone that is at premium. That makes sense to me. So like I said, this is the supply zone that makes sense to me. So like if price didn't come back and mitigate the supply, I'll be just looking at price action on the 50-minute chart, on the 15-minute chart, because the 15-minute chart is very important on these indices, guys. Like, it's a very important chart. It's the very important time frame to look at when you're watching these indices. Okay, so if you so if someone asks me if, like, what time frames do you look at, like you saw, guys, I just jumped from a 4 hour to a 1 hour to a 15-minute. I can go as low as a 5-minute, but I usually go lower when I'm using my phone. So I'm going to be dropping other videos on market structure and everything, the videos that I actually made with the phone, so that it makes it easier for you guys who are trading Deriv, because many people are trading Deriv use their phones. Okay, so we had a break of structure here. So if you were actually looking at the markets, you have seen that the market just broke structure. So this would have been your change of character. So I cannot fix this. Okay, anyway, so this would have been your change of character, and then price came here, made this high again, and just started trading, mitigating everything. So everything here was actually mitigated. If you're actually looking at the price, you would have seen that price actually came here, mitigated this imbalance, then it dropped, broke this low. So this would be a broken structure. It's a continuation structure, like a break of structure, a continuation formation, and then price came here, mitigated this order block that actually took out the structure. So you would have entered here on this trade, but the market gave us a lot of opportunities to get involved in this market, because on this, if you look at this indecision candle, the market came and retraced on the indecision candle. So I'm going to be dropping more knowledge on how I trade, like from the beginning stuff, like from how I look at the market structure and everything. So this is just to show you how I trade. People actually, if you like my strategy, then you can follow how I trade, then you can learn from me. Okay, so this would have been a change of character, and this would be a break of structure, the continuation structure that shows us that the market is turned bearish. So you would have had your first entry here, but you would be actually watching to see what the market would do on this low, because this is the most important low, and this low confirms our market structure shift. Okay, that the market is actually shifted bearish. So when this low got taken out, then you knew that this order block was very crucial. This order block is the very crucial order block that you'll be looking for to enter. If you're very patient, guys, this could have happened in like maybe like 1 or 2 days, just to wait for this move. But to catch this whole move to the downside, it's just simple as this. So you saw that the price changed channel, and then it broke the structure, it shifted character. Then you would be looking at this supply zone that actually took out structure. So you would mark out the body. You mark out the body. I don't mark out the wicks. And if the price came in and tapped on the supply, like here, you'd be getting in aggressively. You wouldn't be looking at the confirmation, but as price taps in on your sell limit, then you know that you're already in the trade. Then you'll be looking for price to start taking out these lows. It changes character, then you know that the price is already turned bearish. Then you'll be looking for entries on these supply zones. So it's not all the time that these supply zones, guys, they usually work. So what I'll teach you, the other trick is, don't be so greedy to want to trade like this. Like I've seen a lot of SMC, SMT traders, ICT traders trying to trade like this, and most of the time the market will actually take you out. But if you were involved on this trade and you be wanting to enter on this second entry, which would be here. Why don't you give yourself some space, trying to anticipate that the market can actually like move again and mitigate probably the 50% of this move and then drops. Okay, so it's simple like that. So like when it comes to risk management, you need to be very careful. You need to calculate how much you are risking on a trade so that you don't have to be caught up in situations like this. You're trying to catch those crazy risk to reward trades like those crazy sniper entries, trying to post them on Instagram and everything, that you just caught a sniper entry. These kind of entries, they're going to let you get pulled out of the market most of the times. So I would advise like to give yourself some space at least, because when you're looking at risk to reward, it goes on how you are targeting. Because on this bearish market, no one knows where this market will move. You can just sell here and hold forever, because you know this is how this market moves, and this is how I trade it. So as I am bearish on this market, I don't know when I'm going to be bullish. Maybe I'm going to be bullish when this high gets taken out and this high gets taken out, and then you're going to be looking maybe to fill this imbalance, maybe for price to come back, to these supply zones, which is going to take a long time. I don't know, it can take a short time, it can take a long time, but anyway, I'm not here to predict the market. I just anticipate what the market is going to do. So as we just take as this low just got swiped out, and there was liquidity that lied above these lows. As this low just got swiped out, the market just never looked back. Okay, that's what I'm seeing here. The market just never looked back. It just continued rallying to the downside, making a low, making a high, making a low, a lower low, making a higher low, liquidating this low, and then continuing to the downside, making lower lows, higher lows, lower lows, higher lows, lower lows, higher lows. So as you'll be trading, of course, sometimes you'll be getting caught out of the trade. Okay, but as you can see, like the price made a lower low, lower low, lower low, lower low, until the structure got taken out. This is simple price action, guys. This is just simple. Got taken out, then you'll be looking at this. Of course, you would have tried to look at this, and it's still valid, guys. It's still valid. It happens that the market just want to go and mitigate. It depends on how many positions that they used for the price to come and mitigate this move. Okay, so it doesn't matter how much position, but this would have been a valid support. But for me, I wouldn't have entered, because I can see that there was liquidity here and there was this indecision candle. Maybe that's where I would have been caught out of this trade. But then I'll be also watching for the supply, because there's imbalance above the supply zone. Okay, so you wouldn't be able to catch all these trades. Sometimes you don't catch trades, sometimes you do